This is not financial advice. I just hope you bought your oven mitts, baby, because it's about to get hot in the kitchen. Now, don't invest in companies you don't understand and don't believe in, because if they dip, you not going to buy the dip, and then you're going to sell low and be right back here crying to me, and I'm not having that. And the family, they not having that. So if you can't handle the heat of these hot stocks, then stay out of the kitchen and consider investing in the index funds. Now, hit that like button to show your boy some love. Hit that notification bell to stay tuned. Let's get straight to the point. Subscribe to the channel. And the first banger on the list is none other than, you already know what time it is, AMC Entertainment, ticker symbol AMC. Now, let me get into this Streamlabs and try to share my screen with you so you can see something. You might see a little bit of like an inception on the screen for like a quick second, and then I'm gonna try to change it. So here we go. And I want you to see a few things. So I'm gonna try to get this little inception that you're seeing off of the video. Here we go. Okay, let me minimize this and bring it down. Okay. So now you should see my stream. So let's get into Webull real quick. Actually, before we even get into Webull, let's look at a screenshot that I got right here, right? Let's look at a screenshot that I got. Let me see. Yay, my boys, let's get it. I appreciate y'all for them super chats. Let's go. So here we go. I want y'all to see this because Adam Aaron, your boy Adam Aaron, shout out to the silverback Adam Aaron. So he put out a tweet the other day, and I wanted to address it in my last video, but I didn't get the chance because I like my videos to be like 10 minutes, 12 minutes, or somewhere in that range, right? Hey, let me see some more gorillas in the chat, baby. Let me see some more gorillas in the chat. So I'm gonna read this to you, and let's break it down and get to the facts like we always do. So Adam Aaron, at the time of the screenshot, this was 13 hours ago, but peep this. He said, there is no mystery in yesterday's shareholder count for continued transparency. As soon as June 2nd, about 4.1 to be exact, investors hold AMC stock, and there's 501.8 million shares. Now, when he did this little breakdown that he tried to clarify on, he said that this number included individuals and institutions. Now, I'm gonna tell you exactly why this was confusing in the first place, but let's read the next part, because notice I highlighted this in purple just for you, and it says this is one of two. Now, let's look at the top one. It says it was a global count. He said it's a global count. Now, this is where the confusion is coming from. So, okay, let's go back to my other screenshots that I have. He said it's a global count. Notice that. Notice he just said it's a global count. Now, before, a lot of the confusion came from this. It came from this, and we'll go back. We'll go back to that other thing. And now he said this. He said it's outrageous but true. Many AMC shareholders live outside the U.S., especially in the UK and Europe. Now, brokerage firms refuse to facilitate shareholder voting, and the cost that it's going to cost to the firms and the money to do so and all of the walkarounds violate the U.S. laws. And nobody's trying to go to jail, so he's not trying to do that. But he sent this out not too long ago, right? And this was actually before June 2nd when this was going to happen, this recount. Now, again, outrageous but true. Many shareholders live outside of the U.S. And he said the brokerage firms over there, who we know, they're on the side of these hedge funds because they all in it together. And I told you in last night's video that it's kind of like when Hercules was fighting that Hydra, that kind of dragon-looking thing, and you cut the head off of one of these hedge funds. Guess what? Two go back exactly in their face or exactly in their place. So now let's go back to what we just saw, and you see that before he said that there was no. Let's take a look. Let's be right on his words. We want to confuse his words up, right? So here we go. He says this. He says that it was a global count. Before, we were thinking that the people outside of the U.S. in most places weren't going to actually be counted in there, right? But, okay, he said it's not just shareholders or that are in the U.S. and Canada. Now, the summary is accurately rounded, kinda, but it's 4.1 million shares, and we got that set. But now, why is that important? Take a look all the way at the top. I highlighted this in blue just for you. So it says retail. If you do the math on that, and he said down here that individuals have more than 80%, right? That means we have about 401 million shares. Keep this number in mind, family. Keep this number in line and mind, and I want you to hold the line. Keep this number in mind, and I want you to hold the line. So now, 401 million shares is what retail investors have. We got that. And totally, there's 500 1 million. So basically that leaves institutions and insiders, blah, 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 with 100 million shares that they could do whatever they want with. We know that we can see exactly what the insiders are trading. And you know what? Let's look at that to make some sense of it. So we know that we have 400 million. We have 400 million shares. Us as the individual investors, we know that the insiders and the institutions, they got that 100 million just in the middle to split up between themselves, right? So all of these shares are being traded. And I want you to just check this out. Check this out. An article came out because they exposed their hand. They expose their hand all of the time. And take a look at this. Take a look at this article right here. It says this. It says that, and let me X out of that. It says AMC board members cash in another 4.8 million worth of shares as meme stock madness pushes the stock to eye-watering heights. So, okay, we know that the insiders have traded 1.4 or actually 4.8 million shares, and down here it says 1.6, right? So they're trading millions of dollars worth of shares. So they're getting rid of some of the shares. However, this is not hundreds of million dollars worth of shares. This is not $50 million worth of shares, not tens of millions of dollars worth of shares in a week or whatever's going on, right? So, okay, keep these numbers in mind. There's 501 million shares in total. The apes, we have been diamond handing this. You have not even met many people who are telling you that they're trying to just day trade AMC. Most people who get involved in this are in it for the cause. So they're trying to actually diamond hand it, right? So let's see. Let's go down and break down some more of the facts again, like we always do. Like we always do. So here we go. Let's take a look. And you know what? Let's actually open up Webull and let's remember those numbers. So we on AMC right now and currently on Webull, we got it at $49.40. This is the current price, right? So now look down here where it says intervals. And you guys, you should be able to see my screen at this point. Let me go and double check. That you can see my screen because I want to make sure that you keeping up with all of the facts that I'm doing right now. I want to make sure that you can see my screen. Let me just double check this. Give me like a half a second to double check what's going on with this, family. Appreciate y'all. I love y'all. Just know. I love y'all. Y'all my people. And y'all always gonna be my people. I want you to know that. I want you to remember that in your heart. We trying to do this together. A lot of people, they're also trying to tell you that let me check this too. Let me check something else out in the background. Okay. Playlist. Hey, okay. Where we going? Okay, let me turn this on while I'm at it. All right. Some background. Yo, this OBS stuff, let me tell you. You got to be prepared, not surprised, family. I'm going to learn how to master this, and that's how we're going to get it going, and that's how we're going to knock it out the park. But here we go. All right, am I on the right screen? Okay. Okay, here we go. The Inception thing again. All right, let me minimize this. So now you can see, no, that's BLockFi. Wrong. Here we go. Okay, you should be able to see my screen I'm sure of it. Take a look at this on the bottom, family. Take a look. And if you can't handle the heat of these hot stocks, and remember, I'm not a financial advisor. However, I just don't have it in my heart to leave you uninformed, baby. So now, take a look down here. You should be able to see this little hand, this little Mickey Mouse looking hand on my mouse. And it says this. It says that the intervals are 1 minute, 5 minutes, 30 minutes, 1 hour, and we got 1 day. We on a 1 day chart. So let's go to the minute chart because it's actually quite simple to understand. Look at these things here. You got green, you got red. They are called candles. Now, these candles, they represent and tell you all kind of different things, but we're going to keep it super simple. If you look at any one candle and you're on the minute chart, every single candle represents what happened in that minute. So if you look up top, this is what I want you to see. You see the volume, it's like 697,000. So that means this minute had that volume. If you move over, this minute had that volume. So that's how it works. But take a look at this. Let's go on the daily chart. Every single one of these candles represents 1 day. So basically, the 11th, the last trading day, how many shares were traded? On this Webull account, it says right now that there was 250 million shares being traded on that 1 day, just in 1 day. Remember the facts. According to our boy, Adam Aaron, Retail investors, we own 401 million of the shares. And then the institutions and the insiders, they own 100 million of the shares. Now, we just showed that the insiders, they sold off a few low millions, like $4.8 million worth of shares, right? So they're not selling 100 million shares. We know that the apes, by and large, are diamond handling this, right? So there's a lot of shares being traded that don't seem like they exist. But now we know, okay, let's look again at the trading volume, and we can see that just on the day, and again, look at this. The trading volume is 215 million. Got it. 215 million. That's still under the 501 million shares that exist. Still under the 500 million shares that exist. But you know what? Let's go back and let's look at some of the facts. Because look at these down here. These bars all represent the volume. You see this? It says volume right here. They represent volume. The higher the number, the higher the volume. So look at this. Just on May 27th, and remember how many shares there are that exist. There's 501 million shares. And there weren't even that many shares in the past, but we're going to even get into that in a second. Take a look at the volume on that day. Look at the volume on that day, and you can look at it up. When I scroll over it, look up here. Keep your eye on the prize up here. Look at that. It's over 697 million, but there are only 501 million shares that exist. That means every single share just about traded hands at least once, and then some traded more than once. But now this is crazy. But you know what? There's an even bigger bar on June 2nd. Look at this. 757 million AMC shares. What point am I trying to make with this? There are synthetic shares that exist. Do I have absolute proof for this? No, but the proof is in the pudding. And I like to put it like this. Imagine that you were doing this. Imagine you were in a dark room. You in a dark room. It's pitch black in this room, family. And you know what? You hear a quack, like a quack. And then you say, that sounds kind of like a duck. And then you know what? You reach for whatever you hear quacking. And you feel not a beak, but you feel a bill, a soft little bill, like it was on a duck. You say, okay, it's dark in this room. I can't tell, but I hear it quack and I feel a bill. This thing is about 1 feet tall. I can feel feathers on it. I can feel some feathers on it. You know what? It's looking like a duck. You can't see it, right? It's quacking like a duck. It feels like a duck. This is a duck. And what duck are we looking at right now? We looking at the naked short volume duck. Now, look at this. 757 million shares, but okay. That's a little bit, 200 million over the shares that exist. I know I've been diamond handing even since June 2nd, which is not that far away. Let's look way back, right? Remember, every one of these candles represents one single day, every single one. Let's look for some sort of an anomaly. Let's look for an anomaly. Okay, here we go. This one looks like it's high. So take a look at this. On January 27th, and there weren't even 500 million shares back then, but on January 27th, there was 1.216 billion. So 1.2 billion shares of AMC were traded on this day, bought and sold. This is crazy. Now, you may be asking yourself, why hasn't this happened again in that time? One of the reasons is this, and this is why I tell you, if you buy AMC stock, you got to make sure you diamond in 1.2 billion. Look at this up here. This is on, the date is on the bottom. It's on January 27th. Look at this. If you buy AMC stock, I tell you, only put money into this that you're willing to lose, because the way that we win is by diamond handing this. If you can't handle the heat, you already know, stay out of the kitchen. But if you can handle the heat, how we handling this, you handle it just like this. You buy what you can afford to totally lose, because with high share prices like this, where did all of these shares go? You sold them back. Maybe not you in particular, but people have been giving them back. So you have your broker, you have your short seller, and then you have your market. The market is you and me. If you've been rocking with me, you know how this goes. The short seller is in the middle. So you got your broker, you got your short seller, and you got your market. That's us. The short seller, they borrow the shares from the broker. So the broker, they lend out the shares to the short seller. The short seller, they sell it to you. The price drops, and then you sell low. You come right back, you get in Keenan comments, you start crying, and then you sell it right back. You sell those low shares back to the short seller. But what if the short seller never, ever, ever actually borrowed the shares from the broker? then they could potentially be selling you shares that don't exist. And then if they're selling you shares that don't exist, but you hold on to them, when you get to crazy numbers like this 1.2 billion, guess what? They would have been on the hook for having to guarantee or actually pay out and make sure that you are compensated for that thing that you bought, that stock that you bought. So even if you have a fake synthetic share, you still are entitled to the worth of the equity. That's how this is going. That's how this is rocking. Let me actually check back into my super chat, because I've seen a few of you guys been hitting me in the super chat, but I want to read them and I want to get to y'all, let you know what time it is, family. Appreciate y'all. So here we go. Let me get this going. And again, I'm getting my feet wet with the live stream, family. I'm getting my feet wet with the live stream. You know what I'm talking about? That's how we getting down. I'm getting my feet wet with the live stream. That's right. We ain't losing. And this thing is looking like a duck. It's quacking like a duck. It feel like a duck. That's how we doing it. And we diamond handing strong. We diamond handing this real strong. That's how we getting down. That's how we getting busy. You know what I'm talking about? I appreciate y'all. Now, okay. My guy said this. He said, bro, told you live will pay off. Props. Appreciate you, big dog. Live is fun. I appreciate the vibe. I love the vibe of the live. Appreciate you. My guy said these hedges are going to be battling. Right. Next 40 weeks. Yeah, yep. We holding there too. And we got call options running. Speaking of the call options that we got running, we got a $145 call. Oh, yeah. Let's actually look into that, because that's another point that I want to talk about. But again, he said buy at least one stock next week. Yeah, we going to crush the hedge funds. That's how we trying to get down. We going to crush them. Crush them. They're not ready. They're not ready for this. All right. Love you. Definitely might want to get some mods. All right. Yeah, bet. Definitely. Somebody said, I appreciate you for the super chat. Just know. Thank you for blessing me with that. Said, can you shout out Damon and Raina? Shout out y'all. Let's go apes. Appreciate y'all. All right. So let's get back right into another point that I wanted to make. Now, here we go. Let's get right back into another point that I wanted to make. Now, let me go back. Let me tell you something about streaming. I got to get somebody to get in here and work my stream for me, so then I could just talk about the financials. So now, here we go. Got the stream inception going on again. And then we're going to get right back into what's important. Here we go. Okay. So now, and it's early morning. I appreciate y'all getting up, and let's get it, and let's talk about it. So now we on AMC, right? And we were looking at the daily chart. We're looking at the daily chart. There's something I want you to see over here. Let's look at the minute chart right here. Let's look at the minute chart. So if you look at the hourly chart, though, and every single one of these candles represents an hour, you can see a bit of a downtrend, right? But look over here. We're starting to turn around. So let's look at the minute chart. Let's look at the minute chart. And you'll see that, and one thing that can help you to realize when a chart is kind of reversing, the only thing that you really need to look at, and the only thing that matters with technical analysis of any kind, is you're trying to represent and notice a pattern at the beginning of a pattern. If you notice you in an uptrend, after the uptrend is about to turn into a downtrend, you didn't really do much with your technical analysis. But if you can see the trend coming, and you can see it where even if you catch it halfway, that's still a good sign. Take a look at this. How do you find, what trends are you looking for? You're looking for higher lows and higher highs. So higher highs and higher lows. Think of it like that. So now let's look at this together. Let's keep it so simple, right? Let's look at this and let's see. So at this time, this was basically back on Friday. So look at this. I'm gonna put this here, and I'm gonna put this here. And I might gotta just move this one just a little bit down. Okay. Here we go. Here we go. So this is decent. This is decent. So now we have an ascending level of support a little bit right here. And you can see, let me see if I can grab this screen and drag it. Okay, here you go. So you can see that we actually had some strength. We actually had some strength basically from 3 o'clock on. From 3 o'clock all the way to market close, we had some strength on Friday. And you can see that and I'm on a minute chart here, family, and it was just going up and up and up. There's a lot of buying pressure on this ascending level of support. So potentially, we could get into the 50s. And I think if we get into I want to say way out, like closer to 55 or so, but you see how steep this is? It wouldn't surprise me if it came down a little bit before it took off. But if we could get into the 55 range, again, we probably just gonna jump 60. and then 65. Like at these certain points, it starts to really, really jump. That's what I want you to consider and think of. But let's look at the options chart. Let's look at the options chart. So here we go. For those of you who don't really understand what options are, there's a few key things that you need to see. So whenever you get in a Webull and you're looking at options, it's going to start you off looking at this thing right here. And it says both, right? This is crazy. Look at all these numbers. You don't want to look at that. What you want to start off with is looking at call options. Now, all of the call options have dates on them. Every single one of them is a date on them, right? Notice that they are Fridays. Now we got the 18th of June, we got the 25th of June, the 2nd of July, right? We got a call option for this one. We got the $145 call, and it's for the 17th of September. But we're going to talk about that perhaps a little bit later. Let's get it going. So let's look at these calls. So if you can see this, you could actually buy. And what is a call option? What is a call option? A call option is this. A call option is basically the option. You can buy a contract. The call option is a contract. All options are contracts. But you can buy a contract to buy a stock at a specific price by a specific date. You don't have to, but it's the contract giving you the option to. So if you were to buy this one right here, guess what? You could buy the option, and these are the strike prices, right? You could buy the option to buy AMC at 50 cents. But guess what? The contract costs a lot. And look at this. The bid right now that people are trying to buy it for is 48. But the ask, what people are actually selling this contract for, is 49. So it will cost you basically about $5,000 to buy this contract. So you might say, okay, I don't want that contract. I want a contract that's cheaper than that. So you know what? Take a look at this line here. This line in the middle, this is currently the price of the stock. Notice that all of these 49, so it's at 49.40, 49, 48, 47. All of these are kind of highlighted in green a little bit, right? They're highlighted in green just a tad bit. They are in the money. That means that whatever price, whatever strike price that you got, the current stock price is higher than your strike. So for example, if you bought this $49 call and you bought it like basically at the beginning of the market open, you'd be up about 32% on the day. And you're in the money because your contract, the price of your contract that you bought it at, you could buy it for less than what it's going for on the market. So you actually made some money here. But now these things are out of the money that are over here. And we're going to talk about a gamma squeeze. And I can't go into detail sometimes in some of these videos that I do because I want them to be like 10 minutes, 12 minutes long when I do the video. But we're going to talk about it here. So now look at this. This $50 one, this is out of the money. It's out of the money. So guess what? Look at the prices. Look at the ask prices. The ask prices, they drop. The further out of the money that you go on the same dates. Because they have less of a chance of actually turning you a profit. So then high risk, high reward. So here we go. If you were to buy this $145 strike on the 18th or for the 18th of June, you would have to pay basically 94 cents a share, right? So you basically have to pay this. So then you would end up paying like not even much, right? Move the decimal twice. 1, 2. You'd have to pay. Oh, over here. Look at the ask. You have to pay $96 for the contract. That's how you would get down. So now, what I want you to see though is this. There's a thing called a gamma squeeze. You probably heard of a gamma squeeze. You probably heard of a short squeeze. Now, a gamma squeeze has to do with options. Take a look. And there are all kind of things over here. Like these are called the Greeks. These are called the Greeks. You got delta, you got gamma, you got theta. We're not even going to get into none of that. We're going to keep it simple like we always do. Take a look at delta. Take a look at delta. And let's look at our current stock price right here. Look at delta. Notice that it's 0.60. If you go up and you get deeper into the money, deeper and deeper into the money, it goes up. Delta goes up. You got 0.61, 0.63, 0.65, 0.67, right? It keeps going up and up and up and up. The further in the money you get. Now, take a look at this. That means the opposite is true. The further out of the money you get, here we go. It goes lower, 0.58, 0.56, 0.55. You know what? In a gamma squeeze, and I'm going to keep it so simple for you. What's happening is this. You buy some out of the money options. You buy some out of the money options. So you wouldn't buy the 49, you buy like the 50. You buy the 51, they're out of the money. You buy the 52. You keep buying these out of the money options. And you know what? The market maker, like these brokers who are in the background, when you buy an option, they are basically selling you these options, and they add liquidity into the market. Now, what they're doing now is, as they're adding this liquidity, they don't want to lose money because they make money from selling you the option. They're not making money if the stock goes up or if it goes down. So they try to keep their balance sheet basically at net zero. They want it to stay at zero. So I want you to think of this. Look at this delta, and this is why I told you that. For example, if you buy this current contract that's out of the money, and let's go even further. Let's say you buy this $65 strike for June 18th, and currently the delta is 0.37. In this case, these market makers, right? These big, large institutions that are helping you to add liquidity to this thing, they will start buying some shares. So then if it goes up on you and then they have to give you these shares, then guess what? They need to have the shares, or at least hedge, so they don't lose so much money if they got to give you all of this money and help you out. So then what they would do is they would have to buy, for example, 37 shares at this 65 strike price. If you were to buy this, the closer it got in the money, right? Then delta will go up and up and up. So then instead of having to buy 37, right? If it keeps going up and delta keeps going up, it will get closer and closer and closer to 1, to the point that they would have to then buy 100 shares, right? So now what happens in this case, I'm gonna keep it simple, I'm gonna keep it short. What happens in this exact case is the market makers, they keep buying shares. They're buying shares because your call options are getting closer and closer into the money. And then guess what? As they're buying shares, the price is going up. More people see your calls making money. So then what people start to do is buy more and more and more out of the money calls. And then the market makers have to make more and more and more options. So then you'll see options, let's say, even further than 140. They have to make more. And then it leads them to having to buy more and more shares. So this is a loop. They're buying shares, the options going up. The options going up, that means they got to buy more shares. Now it's a loop. And then more people start to jump in, and then you get a gamma squeeze. Now, this sends the stock flying up. And then after the gamma squeeze, this could trigger a short squeeze, because now everybody that bet against the stock, all of the hedge funds, they're watching this gamma squeeze happen, and they know that their short position is about to get margin called, and then this is going to cause a short squeeze. So then the gamma squeeze could tilt and be the first domino that leads you straight to a short squeeze. Now, AMC is at prime position for a gamma squeeze and a short squeeze, and one can definitely trigger the other. That's huge, family. That's huge. Let me check the super chats again and get back over there with y'all. Appreciate y'all, man. But a lot of this stuff, it gets deep, family. It gets deep. And I'm telling you, every time you cut the head off of one of these hedge funds, something else pop up in the same spot. It's really something to see, and it's really something to think about. So okay, let me get in here, and let me get in here. Okay. Here we go. 5,000 people in the building. What y'all doing up so early? What y'all doing up so early, family? Make sure that you buy stocks that you willing to diamond hand. Oh, somebody hit me. So, gonna be endorsing the channel. All investors. Appreciate you, Warren. Let's get it. If you've been following me, should be at 1 million subs. Hey, one day, we'll get there. We'll get there. And you love your channel. Explain put options. All right, yeah. So, long story short, right? With a put option, you betting that a stock is gonna go down. You bet that a stock is gonna drop, right? So there's unlimited risk in put options. If you just getting into options now, I would say stick to calls, and stick to calls that are on stocks that you totally and utterly believe in. For example, you can run some calls on Apple. You're not gonna make as much as a really crazy risky call, but you can actually get your feet in the water and start to understand the game and see how it's going and what's going on with that. So now, I want you to think about the put options. Imagine this. In a call option, you bet that the underlying stock is going to rise. But in a put option, you bet that it's going to go down. So let's say me and you, we have a bet. And we bet that, I bet you $5 that this stock is going to go up. The most money that I'm able to lose here is basically that $5, right? Now let's say that you flip that in reverse, and then you say, you know what? I bet you $5 that in this example, I guess there's a limit, but in the put options, there's actually no limit. There's no limit to what you can lose. There's no limit. So if you bet me that the stock is going to go down, and then we have a contract that says, well, the more wrong that you are, the more you have to pay me. So, for example, if I bet you bet me $5 that this stock is going to go down, and every time it goes up $5, guess what? I want $5 more. So then it could eventually go up to infinity, and you could end up paying me $1 million for a $5 bet that you lost. So betting that a stock is going to go down is crazy risky. Somebody hit me in super chat. We up early. Hey, early bird gets the worm, family. Early bird gets the worm. Diamond hand and apes. Let me see some apes in the comments. Let me see some apes in the chat. Let's get it. I got some of my members in the chat. Appreciate y'all. I love y'all. Yo, it's early up in this piece, man. So you freaking love the channel, love the intros. If you can't handle the heat of these hot stocks, then stay out of the kitchen and consider investing in the index funds. Family. But, okay, so now your boy is about to get up out of here. But, again, I want you to take away, if nothing else, notice that there are 500 million shares of AMC. And on certain days, there's 2.15 million shares trading at AMC. How does this make any sense when we are diamond handing it and we have 400 million? Now, I will say this, and I mentioned this on the previous live stream. I've seen a few people say that they either scalping with AMC or they're taking out their original investment. I will never tell you don't do that. You can invest however you want. However, what I told you earlier in this live stream was if you are basically selling shares back, you are helping them to get rid of the synthetic shares. You're helping them get rid of the synthetic shares. What you want to happen is this, and I'm going to show you this. What you want to happen is called failure to deliver. You want these failure to delivers to keep happening. That's my cat talking in the background. But you want these failure to delivers to keep on happening, and you want it to basically just keep going and not stop. So how can I get to this? Oh, here we go. Nope. Yo, this OBS stuff, let me tell you right now, beyond annoying. Sure. All right. Okay, so let's get here. So we got desktop, transition, and then minimize, and then minus. Okay, yeah. So what you want to happen is this. It's called a failure to deliver, right? So now I'm going to X out of this. And I got a little screenshot for you so you can understand exactly what I'm talking about here. So here we go. Where my screenshot at? Here we go. Failure to deliver. Take a look at this, family. This is huge. So I showed you just recently on Webull, if we look at the charts, right? I showed you on a daily chart. Remember, every one of these candles represents one day. And if you look up here, you can see the volume. You can see the volume on each particular day. For example, back in February, there were 460 million shares. Take a look. Keep your eye up here as I move through the screen. I'm VOL, volume, right? In January, look at this day over here, 570 million. There weren't, and look at this, 1.2 billion shares on January 27th. Those were all traded. It's very likely because there weren't as much shares then as there are now. So it's very likely that most of those shares did not exist. How could we have exposed them even back then? Because when you had a high volume like that, it would have been much easier than it is now. However, they still might all exist, if not even more. But the hedge funds, remember, these people that we going up against, they are smart. They are not dumb. People want you to think that they're dumb, but that is not the case, family. That is absolutely not the case. So remember, 1.2 billion, and let's look at this. A failure to deliver is this. What is a failure to deliver? Failure to deliver, it basically refers to a situation where one party in a trading contract does not deliver on their obligation. They do not deliver on their obligation. A failure can also occur when the seller does not own all or any of the assets or the stocks required at a settlement. So let's say this, and let's just make sure we understand that. A failure can occur when the seller does not own the asset that they sold to you. They do not own it. So I seen this on Fox Business. Somebody gave this analogy. I cannot think of his name. But he said, imagine this. Imagine that you are selling your car. You're selling your car, and then you have the title to your car or whatever, right? And then You go and you make photocopies of the title, and then you sell the car by giving people copies of the title of the car. Technically, there's only one car, but you just sold it 100 times. So then let's say that the title says, you know what, you own the car now, you own the car now, you own the car now. And at this very point, what we're going to start to do is deliver it. We're going to start to deliver them at a later date. Guess what? There's only one car. There's no way to deliver it. But since you bought it off of me, I'm still on the hook for the value. And I owe you that money. And now I owe 10 people the money for the value of the car. And they could take me to court and take me and straight to the promised land with that money that I owe them. So now, the same analogy is this. When you see that 1.2 billion shares being traded, guess what could have happened and why you aren't seeing numbers like this? And this is why you have to diamond hand. This is why the diamond hand thing is going to help win the battle. What if we're talking about the copies, the photocopies of the deed for the car or the title of the car, right? Ownership of the car. What if they start selling me back the piece of paper? If they start giving it back, next thing you know, I can make it disappear. Because I have one car, I sold out 10 just photocopies for the title of the car, but now 5 people sold me it back because they didn't get their car just yet. They got tired, the price went down on the car, they sold me the paper back. So now I got the paper right back and I can make this naked car title just disappear. So when you buy AMC stock, do not overextend yourself. Only buy what you are willing to watch go to zero so you don't end up like the people who ended up selling the car title paper right back. So then it gives me the opportunity as a hedge fund to make it disappear as if it never happened. When you diamond hand it, then that's when they get caught out and then the SEC could crack down because of so many different failures to deliver. Because if you never sell it back, you're waiting for the car to be delivered. But guess what? It can't be delivered. Because it doesn't exist. So now since it doesn't exist, this would be proof, nail in the coffin of synthetic naked shorting. Proof, nail in the coffin. And that's what we need because the SEC, they can't crack down on any of this with speculation. They need proof. How are they going to get proof? Diamond hands. Apes with diamond hands. Don't overextend yourself on none of this. Make sure that you only have what you are willing to lose. Make sure you only have what you are willing to lose. And I don't say this because I don't want you to make money. I love seeing y'all make money. What I want to see is you make money, but you extending yourself the right way. That's what I'm talking about. Appreciate you, me solo. Much love. And somebody else said, yeah, we up early in here. Let's talk about it, family. Let's get it. Yes, buy and hold. Let's get it. Anomaly, appreciate you. You the GOAT. Let's get it. Buy and hold. That's how we getting down. That's how we rocking out. That's how we gonna do it. That's how we gonna get it. Sending me heart eyes in the comments. That's crazy. All right, yeah. So, yeah, let me see some more apes in the chat, family. I love y'all. But we gonna let it go. We gonna get up out of here. I might put out another video today. We'll see. Let's talk about it. Let's get it. But I want you to know this. Don't invest in companies you don't understand and don't believe in, because if they dip, you not gonna buy the dip, and then you gonna sell low and be right back here crying to me, and I'm not having that. So if you can't handle the heat of these hot stocks, then stay out of the kitchen and consider investing in the index funds. Hit that like button, show your boys some love. Hit that notification bell to stay tuned. Let's get straight to the point. I'm getting up out of here. Subscribe to the channel. Oh, and get up on the Discord if you want to be up on all of the plays with us. If you want to be up on all of the plays with us, like the options that we running or anything like that, we ready to knock it out the park. And again, major salute to everybody that hit that Nio home run call with me just recently. And guess what? We still got like months to even hit the grand slam on it. Appreciate y'all. Love y'all. Your boy getting up out of here. Let's go.